The stock market is rebounding sharply. Yesterday, the NASDAQ 100 officially entered a bull market and erasing all the losses in 2025. So year to date, it's green, it's positive because the current price has risen 20% from the April 8th low. The surge was driven by positive development in the US-China trade talk in Switzerland, where both countries agreed to reduce tariff by 110%, a much more favorable outcome than Wall Street expectation. The S&P 500 also erased all the losses in 2025, entering a green year-to-date territory, and we have been calling this all along on this channel, even on the day when $5 trillion were wiped out from the market in 2 trading days. So on April 7th, somewhere around here, we said the peak fear is behind us, and we noted that the worst has already happened or was already happening, which was the decoupling between the world's largest economies, which is US and China. And from that point on, the future development could only be neutral or positive. And the current market development is now validating that prediction. The Citigroup US Earnings Revision Index, which is the index that tracks the ratio of earnings upgrades and downgrades, has turned positive for the first time in the past 6 months, okay, signaling a renewed optimism in corporate America as the trade deals and trade negotiations are developing positively. It seems that Trump wasn't bluffing when he told the market to buy stocks. So since the beginning of his second term, he said it twice. The first time was on April 9th when he posted on Truth Social that it was a great time to buy stock. And on May 8th was the second time he said in the Oval Office press conference that you better go out and buy stocks now. And this was right before the China talk over the weekend. There has been significant pain on Wall Street, especially for their bearish traders. They're losing a lot of money as markets are rebounding. And as a result, several firms are actually starting to capitulate on their expectation of a recession. JP Morgan, which was the first major Wall Street bank to predict US recession, they forecasted that in the second half of 2025, US would enter a recession. And this prediction happened on April 4th. But now they're reversing course. They're saying they no longer think US is going to enter a recession following the US-China trade talks. I think the viewer should also note that there are also ongoing trade negotiations with pending outcomes. For instance, US is talking to European Union at the moment, and it's one of the most anticipated trade negotiation. If you look at the current situation, European Union is in a tougher spot because China, as the strongest retaliator to the US reciprocal tariff, and is now also the first major economy to strike a deal, right? Because now you may come to me and say UK was the first country to strike a deal, but I don't think UK counts because UK is the closest US ally, and US actually have a trade surplus with UK. So this deal is very easy. It's an easy deal for Trump. So previously, before China had a deal with US, EU may felt like they had more leverage and cards, because they were seeing China as a counterbalance to the US. However, now China has struck a preliminary agreement with US. EU stands as the only major economy without a deal with US. This weakens EU's position and increases the urge for it to reach an agreement with US. And EU has fewer cards to play now. And talks with South Korea and Japan are also ongoing. So according to sources familiar with the matter, one thing U.S. is demanding South Korea to do is to strengthen the Korean currency against the dollar. So Trump is pretty much asking Korea to sell their U.S. Reserve currency to strengthen their local money. This actually echoes the 1985 Plaza Accord, where U.S. pushed Japan, West Germany, France, and UK to strengthen their local currency against the dollar. so that U.S. is easier to export the goods to those countries, right? So in response, the Bank of Japan slashed interest rate, created massive liquidity that fueled a asset bubble, ultimately led to Japan's lost decade. And for U.S., however, looking at this deal with, or looking at this demand from South Korea, if U.S. is able to secure this today, it will be considered a big win for the U.S. On April 9th, Goldman Sachs predicted 12-month U.S. recession. Right? They were saying the probability of a recession in 12 months in U.S. was 65% on a report titled "Moving to a Recession Baseline." Right? But today, Goldman Sachs has completely flip-flopped. They're now saying, since the report release, they has been raising the price target for S&P 500 twice to 6,100. So apparently they're no longer assuming or predicting a recession because the price target is higher than today's price. So I think it's important to learn to ignore these reports and predictions, especially under Trump's leadership, because the constant policy flip-flops leads to equally unreliable market forecasts. Apparently, Wall Street banks, they only make economic predictions or market predictions based on current policy. But what they should have done is they should have make policy predictions. And based on the policy prediction, to also make the market and economy prediction. Instead of making policy prediction, their entire thesis is kind of useless. Okay, so they're kind of it's kind of worthless. So just got to be careful about those Wall Street reports today. The April CPI report was released yesterday, and they're showing a continued cooling inflation in U.S. For the overall inflation, right? The overall CPI in blue here is down to 2.3%, lower than expected 2.4%. The core inflation is at 2.8%, matching the expectation. So we're now seeing a significant gap between the actual inflation data and University of Michigan's inflation expectation survey. In the Michigan's expected inflation in the next year, the survey came out to be 6.5% inflation, but the actual CPI, right, for April is 2.3. So the actual hard data and soft data is having a very wide divergence. So given the recent progress in trade negotiations and tariff rollbacks, it's likely that the next Michigan survey is going to be a lot softer than 6.5. But there has also been reports saying that the majority of respondents of the survey are Democrats, raising concern about potential bias in the survey. In the CPI report, the shelter inflation index was up 3.99% year over year, lowest level since November 2021. Rent inflation index rose 3.98% year over year, lowest since 2022. So these are among the stickiest component of service inflation in the CPI report, and both are continue to show a downtrend trajectory. So based on the current hard data, everything appears to be pretty strong for US, both the labor market and inflation. And it's looking less and less like a stagflation picture. Trump's negotiation with the Middle East is going to help him fighting the inflation, because yesterday he went to Middle East to negotiate with Saudi Arabia, UAE, to talk about increased advanced chip exports to Middle East, and he was trying to also get investment from Middle East into American tech companies. And there was also other broader economic cooperation. So I think it's likely that he has secured some sort of deal with Saudi Arabia to keep the oil price low, since Saudi Arabia is the de facto leader of OPEC+. Currently, WTI crude oil is around $63 a barrel. It's actually relatively low price level, and this level will continuing to have this low of oil price will help significantly going forward, help Trump administration to keep the inflation in check. Thank you very much.